we have the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So with this video, what we're going to kind of do here is just try to take a step back here and take a bit of a broader view of what has actually been going on with this stock. It's been a very volatile week here. Fortunately, most of that volatility has been in the upside direction, so that is good news. But there's a lot of price movement that has occurred here in a very short period of time. And I do think that it makes sense to sort of take a step back and try to analyze the situation from a broader viewpoint, so that we can try to assess, what are the potential risks here? What are the potential rewards? How far can share prices actually travel here? What would it take in order for us to reverse the bias and things like that? So what we're looking at here is the daily price chart, and we will be going over some specific price levels here for this video. So recently, what we've seen here is the share price action itself. We can sort of just move in here quickly just to kind of take a closer view, but we can see that the share price action itself was having a tremendous amount of difficulty initially overcoming this $6 mark. This really isn't much of a surprise because, as we have known and have been watching for this stock, and I've been saying for this stock, that $6 mark was really an inflection point here. It wasn't the easiest price level to overcome. I think there was probably some short selling activity that was occurring around there, and then once that pressure finally gave way, all of those short positions really had to close out. And I do think that you had a bit of a short squeeze here. I mean, this is what this is looking like, because the share price movement prior to this was already moving pretty strongly. So you can make the argument that there was just a lot of buying activity at the lows, or conversely, you would have to make the argument that share prices were starting to inch higher, and then the short selling part of the market was starting to sort of smell the blood in the water a little bit, and sense an opportunity, because share prices were starting to move higher. You get a little bit of a more elevated region to start implementing short positions, and there is a greater chance of a short position becoming profitable if you're able to establish it at higher levels. So, to me, that's what this really looks like here, because, we were already starting to see very, very substantial movements to the top side. And, what was it exactly that, led to all these further price movements? To me, this really does look like there was a lot of short sell activity right around that $6 mark. So it was good that we were able to spot this in advance. Because once we did break to the top side, the momentum and follow through here was substantial. I mean, we did see a lot of further price movement here. So when we look at the longer term time frames, these movements are very encouraging, and they do suggest that we have found a bottom here at this $3.60 level. There are still people that believe that this stock could collapse from here, and that we could still see $1 or $2 per share. But what we've been watching for this stock for quite some time. And I don't know if anybody remembers that descending triangle pattern that we were watching for weeks. I mean, that went on for a very long time. But eventually that broke in the upward direction, and that was a longer term price pattern. So, all these developments here are encouraging, and they do suggest that share prices have really found a bottom at the area that we were watching, which was, this roughly $3.60 area. So that is very significant here going forward. But the question at this point, is how far can prices extend? One level that we've been watching does come in a bit above the $7 mark. And currently what we're seeing is a resistance zone that has near term started to stall gains a little bit right above $6 and right above $6.60. So, currently, the question is this the final support zone, or sorry, is this the final resistance zone? Do share prices have the potential to continue moving higher? Well, I mean, I don't really see very much in this area, which would suggest that 666 would be the final, resting place for this uptrend. There really isn't anything on this price chart that leads me to believe that this would be the final part of this rally higher. One thing we could point to here on the 4-hour time frame is that share prices have become a bit overextended here as far as overbought territory is concerned. Um, we are also seeing a little bit of a bearish divergence condition because share prices are making new highs, and we're not seeing new highs in the relative strength index. So those are two kind of warning signals at the moment, and that does suggest that we could start to see, a bit of a pullback here because, there is scope here for some downside retracement, or at least a stalling in upside momentum. So, if that were to occur, what would be the key? Like, what would be the main signal that this is actually starting to develop? Well, one thing we can do here is to remove this prior Fibonacci study here, because that move has now run its course. We have seen share prices really blow through here quite forcefully. We did find support zones at some key Fibonacci levels, and those readings were very helpful in terms of allowing us to understand where share prices could actually start to bounce. We do need to take a new assessment here of this Fibonacci study, because what we're looking at currently here, would be a potential price movement, right into the 23.6% Fibonacci zone, which would put us right back at that $6 level, just below there, if we were to see share prices move back in that direction. So that is a possibility here at the moment, because we are going to need to see a bit of a retracement here at some point. So we can't just expect share prices to exclusively move in the positive direction. So, one area to watch here would be that $6 level once again. And I hate to keep, going back to that same area again and again, but this is currently coming into contact with the 23.6% Fibonacci retracement zone of this latest move higher. So if we're looking at this as the dominant trend move currently, that would roughly match up with that 23.6% fib area. Of course, these numbers will change if this high is overcome. If we start to see share prices move into roughly 670 or 680, we will need to redraw this Fibonacci study here, and that would give us a different support zone going forward. To the top side, I'm still looking at this roughly $7.35 area. I mean, to me, this is really the only kind of signal here that's in this region. There really isn't much going on here. It's sort of a desert of price action. There really isn't much that can be said for this region except for this 61.8% Fibonacci retracement zone, which would come in right near $7.35. So to the top side, this is the level that I would be watching. I don't really see any resistance until share prices reach this area. And then to the downside, I would really be first watching that $6 level once again, because we do need to retest that 23.6% Fibonacci retracement level. So here's the current stock market update for NIO Incorporated, stock ticker NIO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.